Stan the Annuity Man, America's annuity agent. So you're interested in pension income streams, aren't we all? Wouldn't we all like to have a pension income stream? Unfortunately, most employers at this point don't provide that. They provide some type of 401k or 403b or something that allows you to have money grow. But at the end of the day, when you get to pre-retirement stage, when you see the finish line of all of this hard work, then you need to understand how to create that pension income stream, right? So that's what we're going to cover today after this brief musical interlude, right when I nod my head down. All right, Stan the Annuity Man here, talking about pension income, which is probably what you're looking to do, right? We all are. You know, for me personally, I'm going to work for a little bit more down the road as Stan the Annuity Man, hopefully. But I'm planning for income in the future. So I have income annuities that are going to start at future dates, joint life with my spouse. So I had a call the other day, a guy wanted the exact same amount of income that his Social Security was providing. And I forgot what it was. It was, let's just say it was $2,500 in that range per month. So he said, I would like to have the same amount of lifetime income stream I'm getting with Social Security. I said, fine, that's an easy quote. That's called a reverse engineered quote. We can do that for you all day long at theannuityman.com, and we'll shop all carriers. And what we'll do is we'll put in the $2,500 per month amount and then find out how much money it would take to create and guarantee that monthly amount. So you're reverse engineering the product. There's two ways to get a pension type quote. Number one is, here's the lump sum, Stan, how much will it create? Or in this gentleman's situation, hey Stan, here's the amount that I want to create monthly, how much money would it take to create that guarantee? We can do it either way. I mean, it's a commodity quote, we quote all carriers. A couple of questions I asked him was, do you want it joint life with a spouse, or do you want it single life? And he explained that single life would be a higher payout than joint life because the annuity companies, are only covering one life, not two. I also had to explain that Social Security is the best inflation annuity on the planet from a pension annuity type standpoint because those increases to the payment are political. They're not based on life expectancy or anything like that. It's just our friends in DC just raising it just to attract the voters, right? Because people that are getting Social Security, they represent a lot of the voters. Now, I had to tell him that to add a COLA, cost of living adjustment increase, to an annuity would significantly lower that payout. So what I advised him to do is let's just solve for that raw number, what it is this year, and it was that $2,500 amount. And so that's what we did. So interesting call. He just wanted to replicate Social Security. The good news is he was already putting Social Security in his head underneath the annuity category, which it is. So pension income streams. Let's talk a little bit more in depth about the structuring of it. Number one, ask yourself two questions. What do you want the money to contractually do, and when do you want those contractual guarantees to start? With annuities, you can have income start as soon as 30 days from when the policy is issued, as far out as 40 years. So you gotta say, wait a minute, Stan, who would defer for 40 years? I would. I have two daughters. They're in their 20s. They're wondering ambiguity, wonderful girls who I'm not sure are ever going to earn a lot of money, right? I love them to death, but one's kind of an artist and a writer, and the other's a surfer and a model. Who knows? They might be rich as heck, but I'm not going to take my chances. What I did is I bought deferred income annuities for both of them and going to have income start when they turn 50. And that way, even though I'm going to be in annuity heaven, right? Nod your head. I'm going to know that they're going to get a lifetime income stream. So for your wondering ambiguity children who we all love, that's a way to use income later guarantees with annuities. But for your situation, you just tell us when you want the income to start. Remember that it's primarily based on your life expectancy at the time you start the payments. Interest rates play a secondary role, and that income stream that you will be receiving is a combination of return of principal plus interest, and we can structure that lifetime income stream so that when your Learjet hits the mountain and you die, I know that's terrible, sad, huh? That whatever money's left in the account would go 100% to your beneficiaries. We can structure it so that, in English, the evil annuity company doesn't keep a penny, even though they're on the hook to pay you for the rest of your life. Just an FYI, and I get tons of calls like this, we'd be more than happy to help you if this is your situation as well. If you're at a company that's offering a pension, they're offering a payout when you retire, and you want to make sure that's the highest contractual guaranteed payout out there, send us that quote, and then we'll run that quote apples to apples comparison with all annuity companies to make sure that your company is providing the highest contractual guarantee for your specific situation. Spoiler alert, most of the time, and when I say most, I mean like 90% of the time or more, that we found that the companies, your company, whether you like them or you love them or you hate them, they're going to provide the highest contractual guarantee when you compare that apples to apples quote with all of the other annuity carriers. So you're doing a pension quote and you're comparing it with all the other pension annuity quotes. And you'll say, why would that be? Think logically. Your company wants to hold on to the money and then dole it back to you over your life expectancy. In other words, they don't want to come up with a cash lump sum to give to you so that you can give to standing annuity man. So that's okay for us to show you those contractual guarantees, which one's the highest. We do that all the time just to make sure that you're owning an annuity for what it will do, not what it might do. And the will do is the highest contractual guarantees available. And if that's not with standing annuity man, that's okay. Part of our job is to make sure that you're getting that highest contractual guarantee. So another great video I did is on the question, is a pension the same as an annuity? I think we kind of covered that here as well, but I go a little bit more in depth in that one to talk about single premium immediate annuities, deferred income annuities, and I dig a little deeper, so that in correlation with this video will kind of fill in the gaps for anything that I missed in this one. Because I'm riffing, I'm bringing this off in the standing annuity man noggin with all this annuity information just overflowing. So remember, you can always get a quote at theannuityman.com. Go there for all things annuity. I do have a podcast as well called The Annuity Man Podcast. See the correlation of all the brands, The Annuity Man. And to just pile on just a little bit more, free books from The Annuity Man. Here you go, Miss Producer. That's the back. Wait a minute. That's the front. And that little gold foil thing you keep seeing, see that? That's what it comes in. That's what I ship it in. A gold foil mailer. Everything, no cost, no obligation. And with that, since you're going to do all of that, get the books, get the quote, listen to the podcast, do one more thing. Subscribe to this YouTube video channel. Why? Because I like to see the numbers go up. I mean, it's like this ego thing for me. No, kidding. I do like having a bunch of subscribers and people that want to educate themselves on annuities, because you need to make your annuity buying decision on your terms and on your time frame. And with that, I'll see you next time.